Hey, Courtney Smith here, and welcome to training video number 3. This one's very different from the previous two, which were sort of on the soft side. But one of the things that well, let's put it this way. Each of the previous two training videos required you to assume that you would be a profitable trader. And now what I want to do is to show you that being a profitable trader is actually pretty easy. It's no big deal. You see, first you have to be a profitable trader, and then you're going to get all the benefits that I outlined in video number 1 and also in video number 2. Well, everybody talks about how hard it is to make money in the market. I've seen statistics that 90% of retail investors underperform the market. I know for a fact that only about 25% of mutual fund managers outperform the market. So even the professionals are not doing that well. But I wanted to show you that that's all because, well, frankly, they're just not doing it right. What I'm going to do is I'm going to show you a simple technique, and the technique is so simple that it's really ridiculous. And I'm also just going to simply look at the last year. Let me tell you how I'm going to pick these stocks. I'm not even going to try to pick good stocks. I'm just going to pick random stocks. How's that? And prove to you that you can make money just picking random stocks. So what I've got here on the screen, this is from the Wall Street Journal, and all I decide to do is to pick really active stocks. So what I decide is this is my criteria. I would take, starting at the top of the page, I would work my way down until I had 10 stocks that met these criteria. Number 1, because it's on this list, it's really, there's high volume. And I also wanted them to trade above $30. So that's it. Oh, and I didn't want two of the same thing. So highly correlated things, I got rid of the second one. So here's what my list is. I took the S&P. I didn't take Bank of America because it was too cheap. I took Apple. Petrobras is too cheap. Radio Shack's $1.60. I took EEM. I took Twitter. Next one was too cheap. I took Intel. No Sirius. I didn't take the IWM because it's too similar to the SPY, so that's why it's not there. Vail, too cheap. Facebook, I took. VIX is a completely different animal, so I got rid of it. No GE, too cheap. Splunk, Microsoft, I kept. EFA, I cut it out because I figured that right now EFA is very highly correlated with SPY. So I didn't want two that were too similar. That one's arguable. You could argue that I should keep it in there. Anyway, but I did take the Chinese, FXI. Where'd that one go? Wherever that one went. And I also took FEYI, FireEye. I think we passed that one. I don't know. Anyway, so those are the ones that I took. And now let's just go over and let me show you the technique that I've used for decades. Here's FireEye. This is the last stock on the list. And what I'm going to do is I'm just going to use the 55-day channel. Now, what's a 55-day channel? Well, it's a very, very simple technique. It was first written about, to my knowledge, by Richard Donchin in the early 1960s, and I read about it probably about 1972 or 73, and I actually didn't read his original work. I read a report by Frank Hockheimer, who was working for Merrill Lynch at the time. Richard Donchin was working for Shearson back in the 60s. And Donchin is a real revolutionary character in the futures world. But anyway, he came up with what he called the 4-week rule. And let me just demonstrate it here. I'm going to put it up here. These days, we would call it the 20-day channel, but he actually called it the 4-week rule. So I'm going to draw this on the chart. And so you take any given day, and I'm going to zoom in. It doesn't matter where I zoom in, but let's just zoom in here. So I'm going to zoom in, and on this particular day, Ooh, hang on, there we go. Okay, if we pick any day, the channel, this point right here where my cursor is, was the highest price in the last 20 days. And down here was the lowest price of the last 20 days. And the rules were very simple. If today the price broke the high, you bought, and if it broke the low, you sold. And that's the whole systems. Now, he designed it for futures trading, but it's because it's very easy to go short there. We're only going to take long positions because I just want to show you using very plain vanilla techniques how easy it is to make money. And I know a lot of you don't really know much about short selling, so we're just going to take long positions only. And over here on this day, you can see that it broke through. So whenever you, oops, I didn't want to really do that, but you can see that on this particular day, it broke through the 20-day high, and you can tell because the 20-day high moved to the high of this day. Over here on this day, you can see it broke the 20-day low because the 20-day low moved to the low of that day. So it's a very, very simple technique. Over the years, though, we've done a lot of research. I actually spent huge amounts of money in the middle of the 1970s. Me and my partner bought a whole database and went back to university to get access to these things. God, I forget what they're called. I think it was something like computers. And I don't know, maybe they turned out to be successful, maybe they didn't, but we thought they'd be pretty successful back there in the mid-70s. And so we tested these channel breakouts. We tested this and many other systems back in the mid-1970s. Probably the most famous people who've used channels are the Turtles, and they used the 55-day channel and a bunch of other things, and they were futures traders. But the concept works on stocks just as well. So the stocks that I picked, my criteria was high volume, so the transaction costs are cheap and we know there's not going to be a lot of gaps in the market. And second of all, I want them to be above $30. Why? Well, really, if I wanted to really pick stocks, I would pick stocks that swing around a lot, like Google and Baidu and Apple, that are even higher priced. But I thought I'd, pick something real easy, plain vanilla. You can do the same thing. Pick 10 or 20 stocks of high volume, at least $30 per share. No two stocks alike, so you have some diversification, and that's it. Now, as I say, we don't really do 20-day channels anymore. The preferred thing is longer ones, like 45 or 55-day channels. And what I teach my students right now in my classes is 55 days. So I'm going to put the 55-day channel up here. And here it is. So once again, we're just going to go through here, and I'm going to go through these 10. I've got 200 days, so that's basically the last year from today, so part of 2013. I'm recording this on September 3rd, which you can see up here at the top, and some of these will still be in positions at the end. So the way the technique works is this. We look for the blue line, and then when we see it break, we buy. So here it opened, here I'll zoom in, it opened way up here. The little tick to the left shows where you buy. The little, is the open of the day. The low of the bar shows the lowest price that day. The top of the bar is the highest price that day, and the little tick on the right is where it closed that day. So in this case, we didn't buy when it broke the 55-day high. We bought way, way up here because of this big gap. And so where do we sell it? We sell it as soon as it breaks the, I don't know what's happening there. Very strange. My computer's going, there we go. So we're going to buy it here, and we're going to sell it when it breaks the 55-day low, which is here. So this was not a very big profit. We bought it here. We sold it here, a very small profit. And as you can see, we never got long again. So, this was we made money, but microscopic money. Nonetheless, we made money. Let's go to our next stock. I'm doing these in reverse order here for no particularly good reason. FXI, this is the Chinese stock market. It's an ETF which mimics the Chinese stock market. Once again, we're going to just keep this simple. We're going to buy when it breaks the 55-day high, and we're going to sell when it breaks the 55-day low. All right, so let me scroll back here and to the beginning of time, and you can see the first time we buy is right here. We break the 55-day, and oh, look at that. We broke it a couple of more times over here, but look, we actually sold it here. So we bought here, sold here. That's a losing trade. Well, look here, we bought it again. It broke the 55-day high right here. And off to the races we go. So we'd still be long with a huge profit. And so once again, another positive experience, a losing trade, a winning trade. So I'm just going to assume we liquidate every trade today. So still another very profitable operation in the market. Let's try Microsoft. See if we can make some money there. I was a little bit nervous with this one when I did this study for you because it's been so dull for so many years, but it looks like we had a little bit of action this year. Look at this. So let me go back here. We finally break the 200-day here down around 28.5. We're stopped out here at 32, so we have a nice little profit here. We then buy it back here when it gaps up here. This is not a stop out. This is not a stop out. And then the market takes off. So we got long over here at about almost 36. And look at this. The market just takes off a nice, huge percentage gain. Another profitable one. That's our third in a row stock that was profitable. And we just randomly picked these stocks. Splunk. Got to be the best named company out there right now. And let's once again go back and go back to the very beginning. So here we get long right here. Look at this. It just keeps powering up. This is around $40 a share. Look at this. No stop out. Just relentless. And then it collapses over here. We got in about 38. We get out at about 70. The market then collapses all the way back down. And here we go. We just got long the day before I recorded this. So once again, this is big time profitability here. One trade, big trade, probably 60% gain, something really ridiculous, but very, very profitable. Facebook. I hear it's doing pretty well. I don't know. All right, let's go back here. Look at this. We buy again on another huge gap. So we don't buy until actually way up here. This is not a buy. Here we buy up here, and that's a huge gap. Ooh, almost gets stopped out here. Whoa. And we finally get stopped out over here for a very profitable trade. We get long again here, and we're still long. And even on this trade, we bought it around 67. We're up around 77. So still another nice trade. But once again, a profitable operation in Facebook. We've now done 5 stocks, all of them solidly profitable, using a technique which is really, really simple. Let's try Intel. Go back here to the beginning again. So we get a full year of trading action. All right, we buy here at about 22.40, well, about 22. Actually, we bought it down here at about 22.08. Things are looking pretty good. Don't get stopped out here, but we do get stopped out right here at 22.61. So a very small profit, 50 cents, something like that. So no big deal. We buy back here. Whoa, almost got stopped out there. And then bingo, off to, oh, I love it. I have to scroll off the top of the page. And once again, this is a stock that we bought down around 20. It's up around 35. A huge winner, a 75% winner on Intel. Awesome. Let's try Twitter. So far, still nothing. No, we've had only, 1 or 2 losing trades. But no losing instruments. Now, Twitter doesn't have a very long history, so we're not going to get much here, but it fit the criteria. We only have one trade. We bought it right here when it opened. You can see this. It opened here, and we're here. So we have an open profit here. Can't really say, look, we don't know if it's going to be a winner or a loser. Right now it's a winner, so I'm going to count it as a winner. What the hell, huh? We're winning. EEM, this is an emerging markets ETM. Once again, all we're doing is buying when it first breaks the 55-day high, and we're going to exit the position the first time it hits the 55-day low. That's it. It's a very simple system. Don't get long here. We get long right here on this gap again at about 40.35, and we're stopped out at about 40.30. Let's call it a nickel loss. A nickel loss here in EEM. Oh, the market then drops quite a bit, but we get long again up here around 40.80. And thank you so very much. Bingo, we're up here at 45 now. So we get in around 40 and change. We're up about $5, 11, 12%. But that's just since April. It's not bad. Let's try Apple. I think some of you have heard of this company. They apparently have done pretty well too recently. Who knows? Anyway. All right, I don't need to know the fundamentals. I just have my 55-day channel. All right, let's take a look here. We buy here at around 65. And yes, thank you so very much. We stopped out here about 73. Nice profit. Buy back on this big gap here at about 81. And now the price is up off the top of the chart. We're up around 103. So another profitable instrument. We had a losing trade, but of a nickel, and then we came right back and just took off and made a tremendous profit here. All right, let's take a look at the last one here. SPY. So this is the S&P. It's an ETF that mimics the S&P, I should say. And let's see what happens here. Okay, so we're going to first of all buy it over here at about 156. It oscillates around. Nice rally here. But we get stopped out around 176, so about $20 per share. Not bad. Turn around, buy back here at about 185. Ooh, nervous, but finally break to the upside. 185. Whoa, no, we don't get stopped out. Excellent. We're at 201, another $15. Now let me wrap this up. We just picked 10 stocks at random. And listen, I teach classes where we learn how to pick best of the best stocks and another technique that we call the pit bulls of the Dow. And these are way better ways of picking stocks than just picking high volume stocks that are diversified. But that's all I did here. And yet was able to make a significant amount of money using a super simple technique. Please take this technique and go pick a diversified portfolio yourself. I don't care how you pick it. Just diversification, good volume, and high price. That's all I'm asking. Now you go pick a bunch of them. Do Google and Baidu and a bunch of other stocks. Those are great for using this technique on. Simple technique, robust technique. It keeps you out of trouble. In 2008, you wouldn't have really lost any money at all, certainly not the 50% that everybody else did, because you wouldn't have bought because it doesn't break the 55-day. So what you're doing is you're making sure there's no catastrophic losses in your portfolio, yet you're really getting on board for most of the big moves in the market, if not all the big moves in the market. Super simple. I'm showing this to you. I actually don't use this technique. I use an enhancement of it. But I wanted to show you that even a basic, simple technique applied on a random portfolio can make money in the markets. I wanted to prove to you that the assumption that I put into the first two training videos can be yours today. You can utilize this method today. And oh, by the way, of course, if you had used options, you would have made sort of astronomical numbers, but that's a whole other story. I just kept it super simple here just to prove to you that you can make money in the market. This is not a hard thing. You've got to execute flawlessly. You can't go, oh, well, should I do this one or not do this one? I heard the market's going to crash tomorrow. No, you got to just follow the rules. Buy when it breaks the 55-day high, sell when it breaks the 55-day low, and you can see that this is profitable. All right, I hope I've proven that to you. This should help make the first 2 training videos resonate with you. I'm going to release the free book here in just a couple days, so just hang on. I'm going to send you an email or 2 to remind you that the free book is coming out. Hopefully you got on the early bird list, because that'll give you a big advance notice. The books are limited. I'm actually printing physical books, so you do have to register for it in order to get it. It's not an instant download. It's going to take some weeks before it's delivered to you, because it is a real physical book. Anyway, I hope you enjoyed this. I hope you go make a ton of money. And more importantly, I hope you get all those benefits of how trading can transform your brain and your personality that I outlined in the first 2 videos. All right, thanks very much, everybody. We'll see you on the next video. Bye-bye.